The past year has introduced a lot of new concepts for the retail investing world, with many of these taking up a substantial amount of media and YouTube coverage, like NFTs, buying land in the metaverse, as well as dog-themed altcoins seemingly making millionaires on their way into the stratosphere. But in reality, while there's obviously a lot of money that can be made in this space, it's often altcoins that are touted for these unfathomable returns in the headlines. That can definitely give retail investors a skewed perspective of what's really going on here. The problem is that basically anyone can create a new crypto project as well as a new cryptocurrency. Just ask fellow YouTuber Bayahiza, who documented the process of creating a new altcoin called Fluffy Coin, simply poking fun at all of these dog-themed coins going viral, and to his surprise or even worry, the coin went viral and quickly amassed a lot of attention as well as a market cap in the multiple millions of dollars. And with that in mind, it kind of just makes you wonder how many of these other 16,000 other cryptocurrencies listed on CoinMarketCap have somewhat of a sketchy background. What is interesting though is that although crypto is often seen as a high risk, high reward investment class pretty much as a whole, well, there are now 60% of Americans that own at least some Bitcoin, and of them, around 55% say that they got into this asset class over the past year alone, most of which is being bought and held, also known as hodled in the cryptocurrency world, meaning that they are planning on just holding their Bitcoin for a long-term period, seeing this more as a store of value and hedging against inflation instead of viewing it as any type of actual money to be used in everyday transactions. In fact, with its limited 21 million cap, Bitcoin's increasing demand in the market has hands down turned it into one of the best asset classes to simply buy and hold over the past couple of years, with returns of 87% in 2019, 302% in 2020, and 60% in 2021, which is pretty fantastic comparing that to the S&P 500, for example. And if you think that's impressive, Bitcoin's assistant to the regional manager, Ethereum, has returned investors 464% in 2020 and 399% in 2021, resulting from its smarter utility purposes and NFT economy that is certainly on the rise. Hey everyone, my name's Griffin, and I hope you're all having a great day. So while the crypto space can definitely be somewhat overwhelming if you're new to it, well, in today's video, we're going to be fully breaking down a handful of different ways that you can make money in crypto in 2022, starting with one that I've been doing for around 5 years now. And just quickly, if you enjoy these types of videos, make sure to drop a like. That's all I ask in return, and it really helps my channel grow, as well as tell me what type of content you want to see more of in the future. So with that said, let's get right into the first way. All right, so the first method, I'll just be straight up here, is definitely the most unrelatable, and that is cryptocurrency mining, where you're basically utilizing strong computers with graphics cards typically, as well as other purpose-built computers in order to work at building the blockchain for the crypto that you're mining and or validating transactions on that network. Now, I'm not going to get into all the nerdy technicalities about how this works on the back end, but basically you can build a computer with the intention of creating income through cryptocurrency mining, like I've been doing since around early 2018, I should say, mining Ethereum, which is the second largest cryptocurrency by market cap, as we can see right here. And because a tiny little computer like mine would never be able to compete with these ginormous warehouses built for this very purpose, I've also hopped into a mining pool where thousands of other people join their power together with their little rigs or large ones and then split the profits accordingly. To keep things brief here, my little mining rig, as it's called, cost all in around 4,600 Canadian dollars. And while this method has definitely been very lucrative for me over the past 5 years, well, I will say straight off the bat that I did have time on my side, where now over time this has become significantly less profitable on a relative basis. In fact, as you can see right here on the computer, these are all the payments that I've received from my mining rig over the past couple of years, and while the payments do tend to stay constant, the period of time between each one of these payments has gradually increased. And this is because as time progresses, the network difficulty, as it's called, the Ethereum network, increases in parallel to the rewards also decreasing. But all things considered, over the past 5 years, with that little $4,600 investment, I've been able to, in today's current market price for Ethereum, generate around $35,000 had I never sold anything. Now, obviously, I did sell over the course of time to pay back my initial investment and such, but still pretty crazy to think that this ROI has been so significant over the past 5 years. Okay, this sounds pretty awesome. Sign me up, right? Well, there are a couple caveats to consider here. First of all, you can actually calculate the estimate profitability of each one of these cards. So as we can see here, each one of mine is generating around $3.90 per day, which isn't all too much in the big picture, and with Ethereum is by far the highest out of all the other cryptos available right now. ETH is still by far the most profitable, but once ETH 2.0 comes into place, this is actually going to fully go away. So I'm going to have to hop onto one of these other cryptocurrencies, really diminishing the overall profitability of this rig. But again, I had time on my side, and the fact that that cost of the rig is already paid off through some of the cashing out of the coins that I was able to mine, therefore makes any of this pure profits no matter how much I'm getting per day. So with all of that considered, I probably would not recommend investing into a mining rig in 2022 to mine cryptocurrencies as it stands right now. Okay, so mining is probably not the best way to make money with crypto in 2022, so let's now jump into one of the more relatable topics here, being just buying and holding cryptocurrencies on an exchange, which is what most individuals will be doing in the first place. First and foremost though, it's important to understand that when it does come to cryptocurrencies, like most other asset classes, but specifically with crypto, higher risk definitely comes with higher rewards, and I'm talking much higher risk here. The reality is that for every SHIB or Dogecoin that creates 5 or 6 figure returns in a year, there are thousands of other altcoins that completely fall off of a cliff and simply transfer money from the investors to the creator of the coin or other individuals. And unless you're totally comfortable with this and betting on that 1 in 100 chance that you're going to be hitting a bullseye on the one altcoin that's going to rocket up to the moon, you're probably just better off investing in the top 5 or even just top 2 cryptocurrencies, really, being Bitcoin as well as Ethereum this year, or ever really, utilizing a strategy of diversification for really hedging against that inflation as well as a store of value. And this is because when you actually dig into the numbers, well, since 2013, across 317 different exchanges and 1900 cryptos analyzed, only 40% ever actually gain any value at all. That's it. And if you remove the top 5% of performers, your overall return would drop down to only 242%, meaning that investing in around 60% of any altcoin that just comes onto the market would essentially be like doing this. Whoa. And when actually looking at how the crypto market has changed over the past decade, it becomes clearly visible how much turnover there is outside of Bitcoin and the top 3 coins since 2018. So it's just important to remember here that while seeing headlines of 10,000% returns are definitely impressive, the odds of randomly selecting one of these coins that's going to provide you with returns anywhere near this are very slim. And blindly throwing money into any altcoin is probably not the best strategy if you're looking to build wealth long term. With this in mind, what then becomes a good strategy in regards to investing into crypto is to consistently buy into and dollar cost average into the top coins, being Bitcoin and Ethereum, that at the end of the day have actually led the most amount of crypto gains over the past 3-4 years anyways. And unlike what you might think, just because these are the largest cryptocurrencies right now doesn't mean that there isn't further upside for them over the coming years as the entire crypto as well as decentralized finance space continue to expand. In fact, JP Morgan just doubled down on their prediction for what Bitcoin could grow to in the future at $146,000 per coin, which is definitely a lot, but should also be taken with a grain of salt because this is the same firm that's predicted it could drop down to $35,000 a coin. And most recently, JP Morgan CEO even said that Bitcoin had no intrinsic value at all. So yeah, there's that. And like we saw in the chart earlier, the odds of making money with Bitcoin and Ethereum are significantly higher than with any other altcoin, even though they might be significantly lower than the astronomical returns for the select few altcoins that shoot up to Mars, considering that you think 464% is a low return. So just like how I routinely recommend consistently buying into broad market, low cost index funds when it comes to stock market investing, the same really applies here to crypto investing for the average retail investor, considering the fact that you're looking to gain exposure long term to this growing asset class. And it goes without saying that although historically speaking, Bitcoin and Ethereum have managed to recover from their major peaks and valleys, you should only invest amounts that you're comfortable with seeing greatly fluctuate, and also take a long-term approach to your crypto investments because you're bound to see massive levels of volatility in the short term. Personally, my exposure to crypto only accounts for around 2% of my total cash as well as paper asset asset portfolio. But I'm looking to continue buying on the dips and maintaining that long-term outlook here, but that's really just a personal preference based on my investor profile and my risk tolerance. Oh, and by the way, when it comes to actually buying and holding my crypto assets, I like to spread out these holdings across different exchanges as well as different wallets to not have all of my eggs in one single basket. Now, one of the wallets I use, for example, is called Exodus, as I'm probably just going to slide on the screen right here, where you can see that I hold some Ethereum as well as a small amount of Bitcoin and Cardano in this account. But as I said, I like to spread this out across other exchanges as well as other wallets. By the way, if you are newer to investing in crypto and you want to open up a wallet, make sure to check out the links down below in the description where you can get some free money simply for signing up and funding your new crypto wallet with some of the exchanges. And if you're American, you can also start generating some return, some interest really on your crypto holdings by opening up a BlockFi account. Once again, there's a link down below in the description where you can get some free money also for signing up and funding your account. All right, so moving on now from individually holding Bitcoin, Ethereum, or any other cryptocurrency for that matter, let's briefly speak about crypto exchange traded funds, crypto ETFs that you can hold in a regular brokerage account and even in select registered investment accounts. These are typically really simple to understand, and some of which will actually just purchase a large amount of, say, Bitcoin or Ethereum and basically just hold it on your behalf, where you can buy shares of this fund and have an equal portion in the relative weight of your holding. So very simple to understand, but personally, I have not actually utilized any of these Bitcoin or Ethereum exchange traded funds for a couple of reasons. First off, I just like having overall control of my crypto assets, where I'm able to spread them out across different exchanges, different wallets, and really just have that added level of control here, which you don't have when it comes to a crypto exchange traded fund, because you're just purchasing shares of the fund in question that's holding crypto on your behalf. But again, that's just my own personal preference, and if that's not something you really care about, an ETF could definitely be a good option. That being said, one downside in my view is the fact that usually these funds do have relatively high management expense ratios. For example, taking a look here at the EBIT ETF offered here in Canada, well, the management expense ratio is around 0.75%, which is on the higher end for exchange traded funds. That being said, when you do consider some of the fees associated with buying and selling and just overall transacting in individual coins, that can also add up quite a bit. So it's really going to depend on your own personal preference. Now, one thing to consider though with crypto ETFs where you're able to hold them in a registered account, like for example, a Roth IRA in the US or the TFSA here in Canada, is that you are inevitably going to be seeing a lot of volatility. So if you're not looking at this from a long-term standpoint, then this is probably something that I would stay away from in a registered investment account. All of that being said, crypto is definitely becoming more and more of a viable asset class for all investors alike. But when it comes to altcoins specifically, it is still very much the Wild West and is mainly unregulated. So it's definitely just really important to do your own research and understand that any money that you are investing in cryptocurrencies is going to be subjected to higher levels of volatility. And with altcoins, consider that money potentially gone forever if it's anything like a meme coin. Basically, like when it comes to stock market investing, understand what you're investing in and do proper research before taking a position in any company or any crypto asset. That is a given with any type of investment that you make. What is guaranteed though is that smashing the like button gives you immediate return on investment. So I really hope you enjoyed today's video. If you want to see more content like this and personal finance topics, make sure you subscribe to this channel, hit the bell button to be notified of new and upcoming content. And as always, make sure you check out all the links down below in the description to different resources I use and recommend. So on that note, thanks for watching, and I will see you in the next one.